Is this record rally running on empty? Let's ask BlackRock CIO of fixed income, Rick Rieder. Rick, you came on Closing Bell in June, and you said, this is, and I'm quoting here, this is the best trading market I've seen in years. We're hovering around all-time highs again. How much of this is just glitter without substance? Because we have a meme revival on Kohl's and Open Door Technologies that they're soaring. Ethereum and Bitcoin touching new highs in recent days, and SPACs are back. So a month after you said so, do you still see this as one of the best trading markets?
Yeah, so trading market doesn't necessarily mean we're going straight up. By the way, one of the reasons I think the equity market, multiples are not great. The amount of cash that's out there and the lack of supply of equities relative to buybacks. Listen, the technicals in equities are extraordinary, so I think that continues. That being said, the reason why it's such a great trading environment, you can sell, we sell a lot of call options against our equity positions, allows us to buy some downside. Selling volatility both in the rates market, the equity market. This is one of those things that people are buying insurance because they're worried about the news. Doing things like selling volatility. You get, like today, extreme movements in a lot of equities, the ability to go the other way on some of that, look at structurally what's mispriced. I think, by the way, the news flow is rapid and continuous, and the ability to actually take advantage of it, I think, is phenomenal.
We have this whole macro backdrop of tariffs, trade wars, geopolitical instability, so much so that we had a report from Swiss Re, which is this global reinsurer, saying there is likely permanent brand damage to the U.S. being considered a safe haven, and that international investors may demand a higher premium for holding U.S. assets. You have that, and then you have companies just on fire with reporting earnings. How do you balance those two sides of the scale?
So you go back to the point about why this is an incredible investment opportunity. So you go back a couple of months ago, people thought the economy is going into a recession, maybe deep recession. Fed's got to start cutting in June, 50 basis points maybe. And then people realize, when you actually look at the data, including post-tariffs, U.S. economy is the most extraordinarily resilient economy. You can throw an awful lot out of it, and it just tends to move along. Today, we meet with international investors every day, including today, and you think about, gosh, these technology companies, there aren't a lot of those in the world that have that sort of top-line revenue growth, throw off that much cash flow. The thought that people will divest from U.S. equities, I think, is a challenged one. But one of the things that's interesting about, we do a lot in the debt markets, as you talk about the treasury market and people say, gosh, if I'm an international investor, it costs me because of cross-current, because of the hedge the currency. So you're seeing a little bit of, gosh, how much do I need to own in treasuries from international investors? But the U.S. equity market, it is pretty hard to replicate.
On that fixed income side, on bonds, how much are you looking at corporate bonds as the place to really get in there and enjoy the yields that we're seeing right now, the kind of income they're producing?
A lot.
And for what window? How much longer?
So I think a year from now, 2 years from now, we could debate, is the new Fed chair going to come in? Are we going to drop rates? How does it? I think today, if you said to me, gosh, we can create portfolios that are 6.5% to 7% without stretching quality-wise. Credit is in, I've been doing credit, I shouldn't say how many decades, but credit is in the best shape that I've ever seen. Company post-COVID, they termed out their debt, their free cash flow generation is great, their interest coverage is great, and so people say interest rates are higher, it's going to slow down some of these companies, particularly investment-grade companies. They've termed all their debt out. It's not stressful at all. So I like just taking that yield. The thought that we can, the Fed will cut rates, but we're still sitting in a place today. By the way, not just in the U.S., you could buy a lot of European debt, swap it back to dollars, and your yields are phenomenal.